What's up, guys? Here's every way you can buy rental property, and I'm talking about the lending side in 2025. There are a lot of talks about rental properties being the path to wealth, the path to success, and I agree with every single one of them. So in this episode, I really want to go over the lending, right? How do you get the money to buy these rental properties? Now, there are 14, 15 ways when I actually started going down into it, and in some ways I was like, whoa, I didn't even know about these. But I'm gonna go over a few of the ones that I know and I personally use to help you guys get into a rental property. So let's get into it. What's up, guys? My name is Brian Tran. I flip and I buy a bunch of rental properties. So let's go into it. Let me help you guys out. The first way that you're gonna be able to get the loan to buying a rental property is gonna be the conventional way. You go to Bank of America, you go to Chase, you go to Wells Fargo, one of the big banks, right? And you tell them, hey, I wanna buy this duplex, this triplex, and they're gonna pre-qualify you. Now, the pro to this is typically you're gonna get better rates, you're gonna get lower fees, but the con is that you're gonna have to have a strong W-2 income. Now, the problem is that they're gonna be looking for the best candidate, like the guy with high income, stable job, the whole shebang, right? Strong history of having an income. Now, that may work for some of you guys listening, and it works for me, but it didn't always work for me. So that's why the next way that you're gonna be able to do it is something called a DSCR loan or stated income loan. Now, there are two different programs, but I like to lump them together because they're kind of one and the same. Now, a DSCR loan basically qualifies the loan based upon what the home can rent for. And if the rent can cover the mortgage, you're gonna get that loan, okay? But sometimes it's hard. Like if you're in California, none of the rent will cover the loan. Like it just doesn't unless you put down a huge down payment, right? The next one is stated income loan. This is where you actually tell the bank what you make, and they verify it using bank statements and all that stuff. These are typical for people who have like cash businesses that usually write off a lot of losses, but they're still making a good amount of money, right? I'm not gonna go into the whole tax thing because that's a video for another day, but they'll look at that and say, okay, based on what we see, this guy can qualify for a loan. Untraditional, the con to this, you're gonna have to put typically a little bit more down. So with the conventional, you can get away with anywhere from 10, 15, 20% down. With the DSCR and a stated income loan, you're gonna probably see 25% down and up. The third, okay, and this is how you guys are gonna be able to get into a rental income property, but not in the way that you're thinking. This way will require you to house hack because this loan requires you to actually live at the property, and that is an FHA loan. FHA is for first-time home buyers, and you can put down as little as 3.5%, and this is great because you can go out, buy a duplex, live in one, rent out the other. But where you get even more advances, even in your part of the duplex, in your unit, let's say it's a 2-bedroom or a 3-bedroom, you put roommates in those other rooms. So now you're making money on half of the property, but then now you're making all the individual rooms as well. Money, 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 cha-ching, cha-ching, cha-ching. The next one I really like, but this doesn't work for everyone. And this is only for veterans only. And this is a VA loan. A VA loan, guys, why I love it so much is that you can put down as little as 0% down. Look, they serve the country, they put their neck on the line, they deserve this loan, and it's a perk. And I think most veterans don't actually know about it and they don't use it to buy properties. Well, I'm telling you right now, this is a great way for you to get in a property with little to no money and then start house hacking that entire home so that you may not be able to cover the full mortgage, but at least now you bring down your rent significantly. Now, that delta from what you're saving in rent and now you're owning the property, you take that money, you stack it some more, and you use it to buy another property. Another loan that you guys can use, and I don't recommend this for everybody, more for the seasoned investor, is a hard money loan. You can use a hard money loan to buy this ugly beat up property, put some sweat equity into it, fix it up, then rent it out, and then go back to the banks and either go through a DSCR, a stated income loan, or a conventional, refinance it to get all that money out and pay back the hard money lender, and now keep that property as a rental. That's called a BRRRR. But that's why I'm saying with the hard money loan, I don't recommend you using that product for long term because typical hard money loans are only gonna be good for 1 year. After that, you gotta pay a hefty fee to extend the loan, or they start raising up the interest rate where you might just end up drowning yourself in debt. Another way, and this is actually gets a little bit more creative, and this is more for the advanced people, I would say, is seller financing the deal. So let's say you find a rental property, call it a duplex, and the owner has bought it in the 50s, and now they have it completely paid off. Now they're looking to downsize, they're retiring, and they don't want to be a landlord anymore. This is where you can go in and offer to buy the property, put little to none down, and tell them to become the bank. Mr. and Mrs. Seller, you bought this property in the 50s. If you sell it today, you're going to be hit with a ton of capital gains. Why pay all those capital gains when instead you can become the bank, you loan me the money, and I pay you interest every single month. Granted, they will pay gains and taxes on the money that they're receiving from you, but that is going to be a significantly smaller amount than if they were to sell you the whole property right off the bat. This is good, but it's going to require two things. Number one, you got to know real estate like the back of your hand. You got to know how to negotiate, because if you don't do it right, they're going to say no every single time. The last way that I can think of for you to get into a property is the subject to way. Now, subject to means that basically you negotiate with a seller to take over their loan. Now, the loan is still going to be in their name. Now, there are ways, if you want to Google it, there are ways to make it more legal, opening a trust account, LLC, the whole nine, stuff like that. But in long story short, you take over the loan, you take possession of the property, you let the seller kind of be able to move on, do something else. Now you have the property, you can go rent that out. The beautiful thing about this is, guys, you don't have to go to the bank to get, that financing in place. You don't have to go get your credit checked. It just makes it a lot easier. Now, typically, this does require a lot more homework as well, to making sure that the mortgage that they have in place is lower than what you can get for the rent. Because if it's not, you're going to be coming out of pocket every month to cover that note. So guys, those are all the ways that you can get lending to buy your rental property. Talk to a lender to see which one fits the best for you. Don't let one hang up be the reason for you not to get into the business of being a landlord. Look, be creative, figure out which one, make it work. And guys, if you're really serious about making this your life, but you're struggling to take that first step, or you start going into it and you just feel overwhelmed, make sure you join my school community. In there, I go live every Friday, 11 to 11:30 Pacific Standard Time, where I actually go over your deals, we go over your problems, we go over like what's making you stuck, okay? We've had a few people join onto the community just recently, and all it took was the words of encouragement to just making sure that somebody was watching over their back, analyzing their numbers so that they can make that decision to just move forward. That's what the school community is about. So if you want to get serious, guys, join below, but also hang tight, make sure you subscribe and hit that notification bell, because the next video that I'm gonna make is about what you need to look for when buying the rental property. So now that you got the financing in place, you gotta make sure you're still buying the right stuff, because buying the wrong property is gonna give you headaches, cost you money, and kick you out of the game. So with that being said, guys, I'll catch you guys in the next episode. Peace.